Hello and welcome to this September edition of Property News. Today I'm going to give you an update on the UK economy, talk about what's happening right now in the property market and give you some real investor insights for the next couple of months. So my name is Tony Law from Your First Four Houses, and my channel is all about helping you replace a job-based income with just a few properties so that you can give up the day job if you wish and go and do something more interesting with your life, like getting your pilot's license. If this is your first time here, be sure to subscribe to the channel and click that bell notification icon so that you don't miss out on any of the free content that I give you each and every week. So let's kick things off by looking at the UK economy. Inflation dropped slightly to 2.1% in the 12 months to July, down from 2.4% in the 12 months to June, and the UK economy continued to grow by 4.8% during April and June, according to the Office for National Statistics. In fact, following a survey of 1,200 firms between the 2nd and 16th of August, Lloyds Bank concluded British business confidence has hit a high not seen since April 2017. This confidence is driven by the continued success of the vaccine rollout, the removal of lockdown restrictions and adjustments to self-isolation rules. However, a new report compiled by CoStar Group reveals the UK has lost 83% of its main department stores in the 5 years since the collapse of BHS, and also that 2/3 of these stores remain empty. The report highlights the huge upheaval in the high street, which of course was dramatically accelerated during the pandemic as people changed their shopping habits. On the 30th of September, the furlough scheme, which has supported so many during the pandemic, finally comes to an end. And of course the big worry is the effect this may or may not have on employment. A study by the British Chamber of Commerce indicates that around a fifth of employers are indeed planning on reducing staffing levels. But then again, that probably doesn't come as a huge surprise because so many companies had to modify the way that they were operating during the pandemic, the end result being they're leaner, and meaning that they can perhaps operate with less staff. UK car production fell sharply in July, marking the worst performance for the industry since 1956, although interestingly there's been a dramatic increase in the number of second-hand car sales. There are still shortages with some building materials, and although plaster and cement seems to be nearly back to normal, sheet materials and timber are still very much in short supply, leading to some big hikes in prices. In fact, in general, staff and supply shortages really have taken their toll on the economic recovery in August, according to a survey by IHS Markit. The group director stated the large slowdown in activity suggests the accelerated levels of growth in the economy that we have been seeing earlier in the summer are simply not sustainable. And lastly in this section, the price of Bitcoin has risen above $50,000 for the first time in 3 months as the cryptocurrency continues to recover from a deep slump. Bitcoin is now up 81% since January, when it was first trading at $27,700. By the way, if you're finding this update helpful, it would just be awesome if you click on that like button down there. It really helps me if that's okay. So let's move on to property now. And surprise, surprise, once again, we saw new record highs in the asking price of properties coming to the market in the mass market sectors. So for example, the asking price for first-time buyer type properties were up 0.6% in August, and the next level up from that saw an average increase of 0.3% in the same month. However, it's interesting to see that the asking price on the larger upper end type properties, typically your 4-bed and above type places, have actually dropped by a fairly hefty 0.8% in August, with buyers no longer benefiting from those large stamp duty savings. In August, Wales saw the biggest increase in house prices in the UK, with an average asking price rise of 2.3% during the month and at 10.9% average increase over the past 12 months. But if we look at the big picture, across the whole of the UK, we can see that the average asking price of properties coming to the market in August actually fell by 0.3%, which is the first recorded drop for 2021. It is, however, really important to note that generally speaking, prices tend to slump in August as people go on holiday and focus on the summer, which is why the summer can actually be a really great time to look for deals because nobody else is looking, generally speaking. With that said, Buyer demand remains strong, suggesting a possible and even probable bounce back in activity in the autumn. The demand for rented accommodation has hit a 5-year high, according to the NRLA. 39% of landlords have stated demand for accommodation had increased in the second quarter of 2021 compared to an increase in demand of 8% in the first quarter. Rental growth has been particularly strong in the East and West Midlands, both up 2.4% annually. There are also signs of confidence returning to the London rental market, according to the ONS. Rents in the city are still down about 5.9% on an annual basis, but are expected to continue to rise, according to Savills, as restrictions on office working, leisure and hospitality starts to ease. On a personal level, I have to say I have been absolutely swamped with offers with my latest refurb, which went on the market recently. We were literally inundated with inquiries. Temporary changes to the right to rent checks that were introduced to minimise contact during the pandemic were due to end on the 31st of August. However, the government has stated that this temporary change will be extended through to the 5th of April 2022. On the HMO front, the UK's largest additional licensing scheme for HMO properties kicked in on the 30th of August, covering some 9,000 properties. It will apply to both new and existing tenancies, including HMOs occupied on a single group tenancy. This means landlords and letting agents operating HMO properties with 3 or more people who are not from one household who, with shared facilities, will need to obtain a licence for the property. Therefore, the number of HMOs requiring a licence is expected to jump from 300 to roughly 9,000. The government's attempt to unlock parts of the property market paralysed by the cladding crisis have stalled, according to campaign groups. Last month, the Housing Secretary stated that buildings under 18 metres would no longer need an EWS1 fire safety form and should be presumed safe by lenders. However, the BBC recently reported that the banks are unlikely to change their policies on lending on these types of properties until the Royal Institute of Chartered Surveyors updates their guidance. And lastly, on the property front, there was a really interesting report by the Resolution Foundation in August which stated the current house pricing boom was not caused by the stamp duty holiday. The report goes on to suggest house prices will continue to rise because of pandemic-related factors, changing home preferences and, of course, low interest rates. The think tank goes on to criticise the stamp duty tax holiday, claiming it was wasteful and that HMRC lost out on potentially £4.4 billion of taxes as a result. Needless to say, the Treasury disputes this and said that the policy saved jobs by stimulating the housing market. Okay, moving on to a few of my quick investor insights. Now, before I dive in here, I just have to make it really clear, these are just my personal views and I may well be wrong. You've got to do your own due diligence. You've got to form your own opinions, especially when it comes to any deals that you may be looking at. So the first of these is simply this. I am confident high demand, falling supply and low interest rates will continue to support further price growth throughout 2021 and into 2022. There's a lot of people that have been claiming this for some time, and I'm actually now stating categorically, I personally feel that this is definitely going to be the case. Well, not definitely, I've got this kind of report wrong before, but I am really quite confident they're going to see continued growth for the rest of this year and touching into the early part of next year. Beyond that, we'll have to see. My second point I wanted to point out here is kind of relating to the level of demand that we're currently seeing for properties. I honestly think that if you're an active property investor, you must get funding in place to be taken seriously on any genuine deals that you're looking for out there. So many people are jumping in, looking at potential deals, and if you're one of those people, if you haven't got your funding in place in whatever form that might be, I just don't think your offer is going to be taken seriously and they're going to give it over to somebody else. My next one is simply this. Look for vacant shops in secondary areas. There are some fantastic permitted development rights that you can bring into play here. So I'm not really so much talking about the high streets, the main high streets. It's those secondary areas, those secondary residential areas where maybe you've got a group of say 2 or 3 shops. You're going to find lots of these are going to be empty in certain areas. This honestly gives you really some huge potential benefits. Next one is, and I've got to say this, and again I may well be wrong, but I honestly think additional licensing that's coming into London is a huge opportunity for anybody that wants to invest in HMOs in London. There's going to be so many people that are really not going to be clear on what's happening with all this new licensing. A lot of people are going to be throwing the towel in. This is your opportunity to connect with existing landlords in London. Start to find ways to solve the problems that they've got, and there's going to be numerous ones. To be honest, I should probably put a video out on this kind of thing. On specifically how you can approach these types of landlords. But honestly, there are going to be so many landlords in London that they're going to be saying, what do I do now? Help, help, help. And many of those are going to be chucking the towel in. This is a great opportunity for you. And lastly, can I just say, can I help you with some one-to-one property coaching? Honestly, we could work together and put together a plan of action to get you your first 4 houses. If you'd like to know more about the coaching that I offer, simply click on the link here or the description box below and I'll be delighted to help.